today's world, there's AI, which is the thing. There is obviously to navigate geoeconomics, your defense has to be strong. Can I correlate that to Indian sectors and stocks? And can one still invest in these sectors and still make money? Because defense at some points does look very rich in valuations.
I think from, so one good thing is the change in the technology space. Generally, Indian companies are quick to adopt the change. So we may ignore initial period, but we may not ignore it for too long period. Therefore, every company today is actually bringing in technology as part of our core strategy, whether it is using AI or machine learning, bringing it as part of the service requirement that they can build from a customer. Whether it is automobile companies, huge investment they are making in terms of automations using technology, bringing in customer connects using AI and so on and so forth. That's something the investment they are making. That's something traditional, historical traditional companies with the core product being there, and they're actually ring fencing the risk by way of making them equally capable using technology. That's something I see as a big change. Second, of course, traditional IT companies who are predominantly brick and mortar kind of model, they themselves, of course, rediscovering themselves in terms of what role they can play in the new AI world. Therefore, looking at the whole business model, by looking at the cost, looking at the areas they have to bring in expertise by way of skill development, and that something is coming. I think fortunately Indian companies, none of them actually get into the froth as we have seen in the global market. Recent, of course, US market has completely gone berserk on the AI and OpenAI. Valuations have gone through the roof, and we do not know how the payoff will come. And one of the things that is being talked about when we talk about India capital investment is the real assets. So when we say government of India talks about capital expenditure, it's real assets, building roads and metros and other physical assets. When companies in India, companies, whether it is Mahindra, Birlas, or Tatas, or Ambanis, or Adanis, and they talk about assets, they're getting real assets. Whereas the technology assets can be supposed to be part of the investment. Whereas the US talks about capital investment rising, is the AI investment. How much of that can actually play out in the global market in terms of return on equity, return on investment? How much will come, that still remains to be seen. So therefore, this something is too early to take that call. At the same time, can we ignore the change, the trend, what is happening in the global market? Cannot be ignored. That's why I think Indian companies are also preparing ourselves for being part of that technology advancement should become part of the business itself. Therefore, my own belief is most of the sectors in India are actually using technology as part of the next round of strategic thinking, which itself will ensure that we protect our downside. At the same time, we are able to participate in the upside as and when it comes.
So you're saying bet on AI users as opposed to being obsessed with the guys who are inventing AI as we speak, which is the Fab 7 companies in the US.
Exactly. I think we have been the quick adopter, and I probably assume India will be able to adopt much better than the past, given the fact that our learning curve has also been quite strong and sharper.
Bala, what are sectors that you must own in your portfolio right now? And I asked you about defense as well. I mean, I know the best may be behind us, but should it somewhere be part of your core portfolio?
I think sectors can vary. I think it's difficult to take a call on sectors, and given the fact that if you divide the Nifty, the larger component of representation in Nifty comes from financial sectors, which I think will remain the proxy of the Indian economy, continue to grow at maybe 1.5 times of the GDP growth. That will remain. The next comes is your IT. Then comes is the auto. Then comes actually the pharma. And then comes is the other sundry sectors, including energy sectors also comes. So these sectors will remain as a core sectors. But whether these sectors will be able to generate significant alpha in your portfolio, but not necessarily, because the market breadth is also widening. The best way to play from investors' point of view, this is what we keep saying, because given the fact the sector rotation happens very fast, and that something cannot be predicted by just sticking to one portfolio, so better to always take the diversified portfolio, such as flexi cap kind of thing. It serves the purpose of not restricting yourself from only one segment of the market, one market cap of the market, and invest in across different pocket. That something is, I think, becoming an asset class to look at it from investors' point of view. The second asset class, which again got discovered in the mutual fund space, is called multi-asset allocation fund. There are two questions come from people: should I invest in gold? Should I invest in silver? Should I invest in mid cap or should I invest in large cap? The common question comes. So what is the solution for this common question? Which is a multi-asset allocation fund, which invest in across different asset classes. Now return InvIT also now has come. And the third question, of course, is the when do I sell in the market? When do I buy in the market? This is again common question for everybody. Everyone wants to time the market. They don't have time to time the market. They don't have time. Everybody is busy in their own world. But still they want to worry about the timing in the market. In order to remove the pain points of these kind of customers' questions, a mutual fund have discovered balanced advantage fund, wherein you apply certain principles of market trend, and basically you try and predict where the market trend could go, and accordingly move your allocations to equity up and down depending upon where the market outlook is, which is a dynamically managed portfolio with a lot of agility. That something comes to the balanced advantage fund. Therefore, mutual fund now becoming a vehicle to participate in a multiple ways and answer your question that you may have in your mind by choosing this kind of product. Why I am specifically again insisting on this, if you look at sector-wise, it goes through such a long period of gestation period, sometimes it can create a frustration among people when you choose certain sector. This is a sector only which I can take a bet. So that's why I think the diversification actually would actually serve the larger purpose, unless until you are a money manager, you have a lot of time in the earth and able to spend your time, then definitely you can focus on sectors. But otherwise, one should leave it to a diversified portfolio to serve the purpose for which you are making the investment.
Like Buffett said, it's not about timing the market, but time in the market. So